Discussing tech earnings with James Kakmat. He is Monis Crespi Hart and
I would like to highlight a few areas in this context relevant for this quarter. One, we continue to maintain our focused approach to growth, which is in line with the objective of improving our portfolio mix. So the domestic loan portfolio for us grew by 12.8% year on year. Within that, the retail loan portfolio grew by 18.6% year on year. The growth in retail portfolio was strong across all the products. During Q2 2018, we also saw an uptick in the domestic corporate loan growth. So if we exclude the net NPAs, the restructured loans and the loans which were in our drill down list, then the growth in the domestic corporate portfolio was about 14%. I must also add that about 90% of the disbursements in the corporate portfolio in H1 2018 were to corporates rated A- and above. The SME portfolio also for us grew by 6% year on year. At the same time, there was a reduction in some parts of our balance sheet. So the net NPAs, restructured loans and the loans in the drill down list declined by about 30.9% year on year. And the loan portfolio in the overseas branches declined by 21.6% on a year on year basis. So considering the growth in certain areas and the conscious reduction in certain other areas, our overall loans grew by 6.3% year on year at 30th September 2017. Secondly, our funding profile also remained healthy. The savings account deposits increased by 21.5% year on year, and the current account deposits increased by 17.2% year on year. The outstanding CASA ratio was 49.5% on 30th September 2017. The growth during Q2 2018 was profitable. The net interest margin was at 3.27%, which is the same as Q1 2018. And in fact, compared to Q2 2017, it's higher by 14 basis points. Coming to asset quality, the gross additions to NPAs continued to decline, and they were at 4,674 crores in Q2 2018, compared to 4,976 crores in Q1 2018 and 8,029 crores in Q2 of the previous year. The net NPAs also declined during the quarter in absolute terms, and the net NPA ratio also declined during the quarter from 4.86% to 4.43%. In fact, as far as the provision cover is concerned, there was a sequential increase of 410 basis points in the provision cover ratio to 59.3% when you include the cumulative technical and prudential write-offs. The bank also made significant recoveries from non-performing loans. The recoveries and upgrades from NPLs aggregated 1,029 crores in Q2 2018. The bank's capital position also continues to be strong. The Tier 1 capital adequacy was 14.85% on 30th September, including the profits for H1 2018. We also continue to be at the forefront of offering technology-enabled services to our customers. The debit and credit card transactions continued to grow at a healthy rate. The number of debit card transactions at the point of sales terminals increased 64% year on year, and the number of credit card transactions increased 40% year on year. The number of mobile banking transactions increased 57% year on year. Even on UPI, there are about 5 million UPI virtual payment addresses that have been created using the ICICI Bank's mobile platforms till 30th September 2017. The bank's artificial intelligence powered chatbot, that is iPal, now handles about 1 million queries or chats per month on both the websites and the mobile apps with nearly 90% resolution. And on the iPal, we offer various services which include simple questions and answers, financial transactions, and also helping the customers to discover new features on our products and channels. Coming to our subsidiaries, during Q2 2018, we saw the first IPO from a general insurance company in India, and that was from the ICICI Lombard General Insurance Company. The transaction valued ICICI General at 30,000 crores and its current market cap is about 31,000 crores. The bank continues to own 55.9% shareholding in ICICI General, and this transaction is one more demonstration of the significant value that the group has created in our non-banking subsidiaries. ICICI General also continues to be the market leader amongst private sector players. It had an overall market share of 8.9% in H1 2018. The gross written premium of ICICI General grew by 17.5% in Q2, and the profit after tax increased by 19.3% to 204 crores in Q2 2018. Talking about our life insurance subsidiary, even that maintained its market leadership position amongst the private players in H1 based on retail weighted received premium with an overall market share of 13.7% in H1 2018. The new business margin calculated on the basis of Indian embedded value has been continuously improving for this company from 8% in FY16 to 10.1% in FY17 to 11.7% in H1 2018. The company's EV or embedded value has also now increased to 17,210 crores on 30th September 2017. Talking about the ICICI Mutual Fund, the profit after tax of ICICI AMC increased by 20% year on year to 156 crores in Q2 2018. With average assets under management of about 2.8 lakh crores for the quarter, ICICI AMC continues to be the largest mutual fund in India. The profit after tax for ICICI Securities increased by 32.3% year on year to 131 crores in Q2 2018. So in summary, during the quarter, our net interest margins have remained stable on a sequential basis and in fact improved on a year-on-year basis. The fee income continued to grow, the loan growth was healthy, and the asset quality trends have improved. So our large size of the balance sheet, of capital base, our robust funding profile, our extensive distribution network, our diversified portfolio, and our leadership in technology position us very well to take advantage of the growth opportunities across the economy. Thank you.
Hi ma'am, Neha from Z Business. My first question is, we are completing 1 year of demonetization. Overall, how much it has impacted ICICI Bank?
Very robust. As you saw, CASA has increased by more than 20% year on year, and in fact overall deposits have also grown by more than 11%. Not just that, we have seen increasing inflows coming in both our life insurance company as well as our asset management company.
Okay. Home loan growth majorly due to Pradhan Mantri Awas Yojana or some other contribution also?
Well, the home loan growth is spread across both in the urban areas, in the rural or in the smaller cities, the higher value as well as the lower value. But we are making good progress in the Pradhan Mantri Awas Yojana as well.
Ma'am, during the second quarter, you've said that about 4,674 crore, that's the gross addition to NPA. Could you tell us where exactly this is coming from, and also what is the outlook like going ahead, considering that there's an RBI audit that is still pending? Do you expect that to add to the gross NPA number going ahead?
So as far as the additions to NPA is concerned, well, I think it's a little bit diversified. Some part of it is the normal course of addition to the retail portfolio. The other is partly from the drill down list from the restructured portfolio. partly a couple of larger accounts that we had spoken of even in addition to the drill down list. So I think it's spread across, but the more important point is that if you look at the last 6 quarters, there has been actually a reduction in the addition to NPA, and this was 4,674 crores is lower than even 4,976 crores of the previous quarter, and 8,029 crores of the same quarter last year. The RBI, I mean, it's not audit, actually it's the annual inspection. We are yet to receive the final report, but I think overall on NPA addition as such, I would say that what we had said at the beginning of the year, that we expect the additions to NPA during this year to be substantially lower than the additions in the previous year.
All right. The reason I'm asking this question is because this risk-based supervision, as they're calling it, is done for the previous year. So the addition to this year then doesn't make sense because your last year number would go up further.
No, the process of the risk-based supervision is that anything that additionally needs to be added actually gets added in this year, in the current year. So, but as I said, that for us the process is on, so we cannot comment anything till the final report is out. But overall, I've given you an indication on the NPA additions.
Ritu from CNBC, ma'am, just to take forward Vishwanathan's question again, we're asking you repeatedly about divergence because 3 in fact banks that have reported their earnings have all spoken about 3,000, 4,000, 5,000, 5.5, 6,000 crores of divergences. And they're part of consortiums where we'd assume these are large accounts where you would also be part of the consortium. So by that guesstimate, I'm sure you'd have a sense, is there a significant increase coming in the second quarter because the audit report should be completed by then?
Well, I think, you have to be sensitive about the fact that this is a regulatory process and it is not prudent for us to, talk about that process till we get the final report. So I would not like to comment specifically on the report, but I can only tell you overall you are seeing the trends of NPA addition, and we still continue to believe what we believed in the beginning of the year, that the NPA additions for the year will be significantly lower than the additions last year.
As far the IBC cases are concerned, you have exposure in quite a few of them in both the lists. While they're sticking to timelines and you're saying there are EOIs coming, how much of these do you really see getting resolved and how much of this do you see getting liquidated because of various reasons? Now, there have been some clarifications from the MCA. Perhaps the rules are being simplified and made more friendly for the bankers. But how much resolution at the end of the day do you see, and what kind of haircuts will you have to take under IBC?
So first of all, I think, since the kind of ecosystem has been put in place for the NCLT cases, some of the clarifications that are required are also coming in the guidelines. I would say that as far as the timeliness of decisions is concerned, the progress has been pretty good, because out of the 12 cases, 11 have already been admitted, and in most of the cases the IRPs have been appointed. The EOIs now have been received in many of the cases. So I think in terms of timeliness, it is moving quite well. That's the experience of the 12 cases. Now that the EOIs have been received, I think gradually we will start getting the bids as well. So in terms of actual economic recovery, I think it will be the next quarter, that is the last quarter of the financial year, that we will get a better sense on what kind of economic recoveries we make. But the positive part is that in the operating assets, the assets that are operating, actually you are seeing that the EOIs are pretty strong and they are from very credible parties. So that goes to say that for the operating assets, this process should work out well.
But the haircuts that you think you'll have to take on these cases, would they be 40, 50, 60%?
No, I think it's actually not correct to put 1% and generalize it over the cases. I think it will actually vary quite a bit case to case based on which industry it is, what is the state of the operations of the plant, and so on. So it will be very different. But by the fourth quarter, start getting some sense.
Just throw some light on the credit outlook, particularly the way things are panning out. One, there's an indication that things are settling down after the demonetization or GST. So how do you see the credit outlook, particularly on the commercial side? Do you see it muted in this fiscal, or things are gradually improving perhaps in the Q3 and Q4?
So if you look at the credit growth overall for the system, banking system, actually, September, the growth was quite robust. And if you look at the numbers up to mid-October, the credit growth from the banking system is actually now at about 8.4%. That is what the October numbers are. And if you add, the instruments outside the banking system like CPs and bonds, etc., our belief is that adds another around 3% to credit. So overall, the credit to the sector outside is in the region of 11 to 11.5%. I think that's not a very bad number. That's one. Within that, of course, the retail credit is growing stronger. And in fact, the housing credit also, now the growth is around 13% for the banking system. For us, as I said, the domestic loan growth is pretty healthy. Our retail loan growth is almost 19%, and our corporate loan growth also on the desired portfolio is in fact 14%.
And ma'am, quickly, any plans for further fundraising, particularly any plans to monetize anything more from your subsidiaries this fiscal?
Again, we keep taking calls based on, what the market opportunities are, what is the stage of every company and so on. So I think what we only say is that over a medium term, we have indicated that we have a plan to monetize some part of the investments. We have begun this process. We will take, step by step a call as time moves on.
Ma'am, Nivrita here from BTVI. Ma'am, the government recently announced this big recap plan, of course. Do you expect that with this kind of recapitalization, public sector banks and consortium banks will be in a better position to take haircuts and resolve the IBC cases that are already underway, as well as the additional list?
Well, I think it's a very significant step, because it goes a long way in conveying a confidence to the system, to say that the banks here now have the ability to do both. One is participate in growth, and the second is to be able to resolve cases and take provisions if required. So I think in that sense, it's a very, very big measure of confidence. Yes, of course, it also requires that the banks now arrive at the resolutions in terms of the time frame that is being envisaged.
Also, if we look at the slippages that came from outside of the drill down list this time, could you just break up how much of that was retail and corporate? And on the corporate side, which sectors are still slipping?
No, I think it's really not about sectors. It's about, a few cases that slip. And in some way or the other, we have talked about some of those cases in the past as well. So it's really not specific sectors. It's really more about cases. Thank you.